company that's on our radar. The Q4 revenue growth came in line with estimates, but the margins were at a multi-quarter low. We spoke to the management a while back, and they mentioned that they are very, gung-ho about getting investments into the Apollo 24/7 business, and they're looking to dilute some stake in that business as well. Ekta is here with the key takeaways. Ekta, over to you.
Well, I'll start with the hospital business for Apollo, where it was quite strong. Revenue was up around 19% on a year-on-year basis. The occupancies were at around 64% versus 65% on a Q-on-Q basis, and versus 58% year-on-year as well. The average revenue per occupied bed also improved by around 10% in Q4. Now, coming to what is tracked more closely, which is basically the digital and pharmacy arm, and which is actually quite exclusive as a model for Apollo in terms of size as compared to any other hospital company. Now, Apollo Health Co. basically houses the pharmacy distribution arm, which is basically the back end, and Apollo 24/7, which is the omni-channel company. EBIT losses have expanded on a Q-on-Q basis, stands at around 84 crores for the quarter. The revenue was at 254 crores for Apollo 24/7, but the positive is that the operating costs were lesser at around 189 crores. The GMV had hit a targeted 1,643 odd crores. The street was working with 15 to 1,600 odd crores. That's what the guidance was from the management as well. And however, it slowed down as compared to the growth that we saw in Q3. So GMV for Q4 was 590 crores. It was up 9% on a Q-on-Q basis. But in Q3, it was up 65% on a Q-on-Q basis. Now, the management has said that they will be reaching EBITDA break-even for Apollo 24/7 by Q4 of FY24. So they're sticking to their old guidance. They see an opportunity to raise equity in Apollo 24/7 by the end of the year. Remember, this has been going on for a couple of quarters now. They're looking to raise around $200 million, possibly diluting 5 to 6% odd. That would value the entity at around $3 to $4 billion. Overall guidance for the company, top line growth seen at around 15% odd. Margins should probably improve to even 15 to 16% odd by the end of FY24 versus 11.3% in Q4 is what they recorded. Let's listen in to what the management had to say.
The overall company revenues, the healthcare services was very strong in growth. We registered a 21% improvement in growth in the healthcare services, and the EBITDA in that was actually 29% growth, coming in at 535 crores and 252 crores of PAT. So with if you look at healthcare services, again, revenue grew by 18%, and I think there is a strong momentum to grow. This will continue to support the EBITDA growth of the company as well as profitability. Definitely 15% growth in top line. We were trending at 18%, but I'm being very conservative and saying that we should, because if you look at the healthcare services, there has been, an 18% growth. And if you look at pharmacy offline, there is 31% growth and 42% growth in EBITDA for offline. So if you put the different components together, you will see a 15% minimum growth in top line and definitely 20% growth in EBITDA as well as profitability. We are looking at opportunities to improve, to fund some of the growth. And right now, I must say that our focus is on controlling the cost, which is happening very well.
All right, that explains why Apollo Hospitals is higher by about 1.5% as we speak. But hold on, Ekta, you're still with us.